All right, yo, what's up for you guys watching this on the YouTube replay live stream? I appreciate you. We're just going to be looking at a bunch of stocks live. We're going to be looking at my portfolio as well. Check this out. On the day we're up 0.35%. Yo, I'm reading both the YouTube and the TikTok chat. So what's up, everyone? Here's all my stocks on the day. Look at McDonald's, dude. McDonald's is having a great day, up 1.75%. They're actually pretty close to an all-time high. I'm up 14% on them. Here's my total percent change on every stock in here. So we are seeing big tech kind of fall today. If we go to the mega cap watch list right here, if we see what's down today, Louis Vuitton is down 6.3, UNH. Dang, Amazon's down 2.8. I don't think the tariffs exemption is really going to benefit Amazon, the one that's going to help out Apple. Because, yeah, if we go up here, Apple, dang, they kind of lost some of its gains. Apple was up 5% earlier. But, yeah, Apple's still up 2%. But McDonald's, they're up 1.7. That's the big winner here today. But yeah, Tesla's down too. So also I have my Moomoo portfolio over here. So we're down 0.5% in here. I do have some cash on hand. I am ready to buy the dip if things get worse than today. But yeah, we've been loading the boat on Amazon. Look, Amazon's down 2.8. Well, we're also down 2.8. So yeah, we've been buying some Amazon shares. That's a growthier company that I like. But I've also been buying some higher yielding names. Like check out this stock right here. This is ticker symbol Cube. This is a self-storage dividend stock. They have a 5.4% dividend yield. And in my opinion, again, none of this is financial advice, but I think it's sustainable. Yo, what up, CJ? What do you think is the best between? Yeah, out of all three of these brokerages right here, I like this one right here. It's called Moomoo. Yeah, what's really cool is you can track like all these super investors' portfolios and stuff. But yeah, if you guys got any stocks you want me to look at, let me know in the chat. I'll give you some analysis on them. One stock I've been heavily watching, and I'll go back to my Robinhood portfolio in a second here, but Uber stock I think is at a really good price. Again, not financial advice to buy them. Like, look at their active users; it's still growing. They have 171 million monthly active users, so a ton of people are on Uber. And look at this: if we look at their mobility revenue, Uber is still growing. The revenue's up 25% year over year, literally to a new record. So that's incredible mobility revenue growth. And same with the delivery. Delivery revenue's at a new record, up 21%. So if we look at the FCF of this company, the free cash flow, it's ridiculous. They're making easily over $1 billion of free cash flow every quarter. The net income's crazy as well. They're making should be making like over 500 million to $1 billion of net income a quarter. So yeah, Uber's really cool. I do like them. What up? Zoe said Meta stock. Hey, I do own some Meta. So actually, I'll show you that real quick. If you head back over to my Robinhood, this is my main, this is my dividend growth portfolio. Yeah, look at that. We've lost all the gains. This morning we were up 1%. Now we're actually barely green on the day. If we go to year to date, we're still down 8.4% year to date. Yeah, if you got any questions for me, let me know. I just like being completely transparent. I go to so many other TikTok lives and no one else like shows their portfolio and stuff. But yeah, check this out. Oh yeah, here's my total percent change on every stock. So we're down on Google, United Rentals, and I'm just barely down on them. But yeah, McDonald's is doing great today. But yeah, it's like a mixed bag. Some stocks are up, some stocks are down. Like, look, oh yeah, here's Meta. That's what I was coming here to show you. My Meta stock is only up 6.3%. So Meta, I think's at a pretty fair valuation. Yo, what up, Jesse? Good to see you. Hey, yeah, thanks for showing up here, Jesse. Yeah, we're streaming on YouTube and TikTok right now. I'm reading both chats. So let's do some analysis on Meta. The PE is so fair in my opinion. They're trading at 22 times net income. There's also a buyback company. And look at their active users. They have 3.35 billion daily active users. So literally half the world's on one of their apps a day. They own Facebook, Instagram, WhatsApp. But the best part about Meta is the bottom line. Their net income was 21 billion. And actually, if you notice, the revenue's up 20, the net income's up 50. So that means they're growing their net margin. Their net margin is now a 43%. That is ridiculous net margins. Meta deserves all the hype. So that's why they're in my portfolio. Just because I like them. Hey, appreciate that. Bro, Rabbit said SoFi or Intel. You know what? I would, in my opinion, way, way, way rather buy SoFi than Intel. Intel's losing a lot of money right now, and SoFi is actually making money. But this one still has a little high of a valuation, but check this out. I do own this one, but here's what's so cool about SoFi. Look at specifically the financial services revenue growth. I mean, this is impressive. And this is what I like about SoFi is the growth here. And not only the growth of their sales, but also the growth of their bottom line. A lot of people didn't take SoFi serious. Look, they were losing 100 million of net income a quarter. Well, now they're literally making net income every single quarter. So SoFi is a profitable company. A lot of people are taking them more serious. And here, let me actually show you my SoFi position. I got you. Let me pull that up here. Yeah, look at us again. Don't listen to me. None of this is financial advice. Look, we're literally down 17% all time in here. So What was the one I wanted to look at? It was, oh yeah, SoFi. Yeah, we do. I don't have much of them. I took a lot of profits on them already, but I still own 24 shares of SoFi. This is the company you don't want to have a lot of exposure to this kind of company. Maybe just like 2% of your portfolio. But yeah, SoFi, I do own them. I might be biased, but I love them a lot more than Intel. Do I do options? No, I don't really do options. I mainly just buy and hold shares of great companies. Um, Let's see. Do you think the Intel can make a comeback? Well, you know what? I'll also show you that. Let's go look at Intel. Oh yeah, also we'll look at NURS. I got you. So here is Intel right here, and this is unfortunate because they're literally lower than they were in 2014. So the stock price is not done good. And that's because, I mean, I'll just show you the numbers for yourself. Look at the net income right here. It's just really choppy. I mean, they're losing more net income than making money. And the same with the free cash flow down here. Now, it's just not good. They're losing so much money every quarter. So I really hope they can make a comeback. I just want to see them get profitable, bring back the growth. I mean, they have a huge GPU market share. Like, look, they have a 65% GPU market share, but it's slowly being eaten by like AMD and Nvidia. So anyway, we could look at NVIDIA as well, but let me look at NURS. So NURS, I don't, is this the one you're talking about? Hydrite Technologies. So this is a small company, a $60 million company, but they're up 15% on the day. So they do, they have 5 million of revenue and they're just barely losing any money. They have more liabilities than they have assets. It's not great. Only 2 million of assets. It's a Canadian company. I need to do some more research on that one, but it just looks really risky. They're only worth 60 million. Doesn't take much to move that one. So it's a green day. What up, Todd? Yes, sir. Yeah, if we go to our Robinhood portfolio right here, I mean, we've actually lost some of the gains here, but like this morning when we opened, we were up 1%, but we're still up 0.27%. It's better than being red. McDonald's is having a great day. They're up 1.7. So yeah, here's all my stocks by total equity. My largest stocks are at the top, and then my smallest holding are at the bottom. So anyway, let's. I wanted to look at what was this stock? Oh yeah, let me know if y'all want me to look at NVIDIA. Oh, here's a cool ETF right here, SCHD. So this is a higher yielding dividend ETF. They have a 4.10% dividend yield. So you get 4% of your, all these have like 2 to 3% yields. Actually, if we go to Warren Buffett's portfolio right here, he owns Coca-Cola, Chevron, Bank of America, all the like 2 to 3% yielding dividend stocks, which is cool. So let's see. Um, ACHR. So yeah, Archer Aviation. This one's just really risky. I know they just got like a lot of contracts. Like that's kind of why they really rallied up right here. Like they got some new government contracts or something. But right now they don't have any revenue still. They've never sold a product or a service, so it's a little hard to buy Archer. And they lost 500 million for the full year 2024. So I'd really need to see this company finally make some revenue. And look at that. If you look in 2 quarters, the analysts are expecting them to finally make 7 million, but 7 million really ain't much if they're losing 500 million. So I'm just avoiding that one. I'm just looking elsewhere. But they could still do good. They're big momentum stocks. So here's NVO. This is the company that owns Ozempic. Has anyone heard of that like weight loss prescription? So this is that stock right here. And unfortunately, if you're wondering why is the stock falling so much, it's because the Ozempic patent expires in 2026, and unfortunately, that's where like 93% of the revenue comes from. But this company prints money for right now. They make literally 3 to 4 billion of net income a quarter. You get a 2.10% dividend yield. So NVO is at an extremely low valuation as well, 19 times PE. But I'm scared of that patent expiration. I'm not sure. They're already seeing competition from like Hims and Eli Lilly, but there's a cheap valuation, good yield, you know, and the revenue hasn't dropped yet, so I wouldn't be selling that one probably. Um, what do you think? Oh wait, yo, what up, Harris? He said, "What are your thoughts on WLL?" So this is Welltower right here. I believe this is a real estate investment trust. Let me go to the dividend right here. So yeah, you get a 1.7% dividend with this company. Oh, so they do senior housing. That's a popular industry right now. So wow, look at their senior housing operations. It's up 37% year over year. So I can understand why this stock has done too good right now. That's incredible. And they do triple net leases as well, which is pretty cool. But let's see, what about the bottom line? Yeah, they're making a lot of net income, and cash from operations is 500 million. That's what you do a dividend payout ratio from. So actually, well, yeah, they're a cool company. Congrats if you own them. I do like them. Let's see. Ooh, someone said APLD. So APLD earnings today, that's one of Nvidia's stocks. Let's go to Nvidia's portfolio right here. 16% of their portfolio is in APLD. So yeah, they report on April 14th. Yeah. So actually, I really like APLD. I'll give you a quick analysis on them. I like them specifically for right here, their cloud service revenue. Look at this. I mean, this is so impressive. A year ago, it was 2 million. Now it's 27 million just in the most recent quarter. So that's some impressive APLD growth. But you still got to be careful with this company. They're still losing net income. So I would like to see this company get profitable. But yeah, they report earnings today after the market. So they report earnings in 3 hours. So in 3 hours from now, that stock is either going to be up or down a bunch. So yeah, that'll be interesting. So yeah, hey Gabriel, I do like SCHD. That's the higher yielding dividend ETF. But let me go see how my portfolio is doing real quick. I'll give you a quick update. So yeah, we're kind of losing today's gains. We're only up 0.18%. Oh yeah, what's our Roth IRA doing? We also have a Roth IRA. Dang, yikes! Our Roth IRA is down 3.3%. So what happened in here? Oh, InnoData is down 7% today. So yeah, InnoData, the really high growthy name, is down 7. But look at Kroger. If anyone's heard of Kroger, they're like a smaller Walmart. They're a grocery store. I do own 5 shares of them. They have a nice dividend, low payout ratio, nice stock buybacks. So I do like Kroger. So let's keep going here. What up, Spencer? You said CLDT. So what is this? Chatham Lodging Trust. So this has a 4% dividend, but this is a very small company. They're only worth 300 million. So company hotels. Um, well, let's see right here. What's the sales doing? So the sales are up 3% year over year, but yeah, look at this net income right here. The net income's looking pretty choppy. That's probably why the stock hasn't done too good. They have not performed as well as the REITs have. They have a 4% dividend. Not sure if they can I don't know. I just be careful with that one. Nothing's really blowing me away there to really want to buy them. If you get what I mean there. Again, hey, none of this is financial advice. That stock could still do good. I mean, I'm not an expert. Like, look at this right here. I'm down bad on this stock. Hey, um, let's see here. I'm down to, if you guys got any stocks you want to look at, let me know in the chat. I got you. I'm reading both the YouTube and the TikTok chat. Oh, hey, this is a Oni. This is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link there. Yeah, you can track like super investor. It's free. You can track like super investors' portfolio and stuff. Like we can see Nancy Pelosi's portfolio. Oh, actually, I don't hate this stock. So here's GameStop. Yeah, what up, random? So GameStop, there's one thing I really like about this company. So if you look at the market cap, the whole company's worth $11 billion. So GameStop is worth $11 billion. And let's see how much cash they have. They have 4.7 billion of cash. So literally half of GameStop's market cap is just their cash on hand. And so that's what's really cool about them. So out of all the meme stocks, GameStop is not the worst. And they have no debt. I forgot to mention, GameStop has no debt and a ton of cash, so that's cool. Um, if I'm building, let's see, what is XLK? I've not heard of that one. Let's see, the technology sector spider fund. Oh, yeah, this is an ETF right here. So if you look at the top holdings, yeah, it's kind of like a lot of big tech: Apple, Microsoft, Nvidia, Broadcom. Hey, they got Salesforce. I got some Salesforce. And they have IBM, Oracle, Palantir. Those are some nice holdings. That ETF was doing pretty good as well. So nice. Oh, Rivian. So yeah, Rivian, actually the largest shareholder of Rivian. Unfortunately, this stock's at like an all-time low, but the largest shareholder of Rivian is actually Amazon. So I do own Amazon stock, so I technically own a little bit of Rivian. But here's why I would just kind of avoid this company for right now. They're still losing a lot of money. They're losing like $1 billion a quarter, but the trend is getting better. So that's what we want to see them kind of get close to net income positive. Oh, hey, Alania. Hey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the first link there. It's called Mumu. It's free. But yeah, Rivian, I'm just avoiding this one because I already have exposure to it through Amazon stock. Amazon, I think this one's a great one to buy. Again, this is not financial advice, but I've unloaded the boat on Amazon. I've put my whole position in them the past week here. They're huge in the AWS. Look at their Amazon Web Services. It's over 100 billion of revenue for them, which is ridiculous. But the bottom line's the best part. They made 20 billion of net income just in the most recent quarter. That is crazy. And this growth of the net income is what's so impressive about Amazon. So that's why I'm buying them. Definitely not selling them. They're down on the day. I'm down 2.5% on them. But yeah. I've been buying comfort systems as well. Whenever I buy a stock, you can kind of see where I buy. Ooh, if y'all want to see a stock I just completely sold out of, I feel bad doing this. But this is why you can't be emotionally attached to your stocks. I completely sold out of Nike. Fortunately, I did it at the right time. I sold all my Nike at $79, and well, now it's at $55. So Nike has fallen off a cliff. Unfortunately, Nike has lost all growth. If we look at their sales right here, look at that. The revenue is down 9% year over year, but the net income is down 33%. So that means their margins have absolutely collapsed. The net margins down 25%. So got to be careful with Nike. Unfortunately, they lost all growth. If I was looking for a luxury stock, I would buy, again, not financial advice, I would buy LVMUY. This is Louis Vuitton, Dior, Hennessy. They own a lot of popular luxury brands. And look at this. I love how diversified that they are. They're kind of unlike Nike. They have a lot of other brands. Like, look, they're in fashion and leather, selective retailing. They're in watches and jewelry. They have perfumes. Perfumes are high margin. So anyway, I like LVMUY if I had to pick one. They have a 2.3% yield, a little lower yield than them. Oh, what up? Gabriel said CMCT. What's up, dude? Let's check it out here. So I've not heard of this one. Ooh, this one looks so risky. Please don't buy this. They're only worth $3 million. So this whole company is worth $3 million. Yeah, they're in offices, hotels, multifamily. And look at that. If you buy the whole company for $3 million, you're buying a business that loses like 30 to 40 million of net income a year. So they're gonna go bankrupt. I mean, unless they get bailed out. But yeah, that one looks so risky. What is BBWI? So Bath and Body Works. So these are not. It's like a mall stock. So they're the same price as they were back in 2013. You won't. This is the kind of company you just won't outperform the market with this kind of stock. They have a 2.8% yield. That's not bad. A 2.8% dividend yield. Let's go look at the net income actually. Let's see. So the good news is they are making net income every quarter. Like they're not losing money. Like if you look at Kohl's or Macy's, those are really risky ones. But this company's actually making net income every quarter, so that's not bad. But again, that's not the kind of stock I'd want to own. But they're not doing too terrible. Oh, here's a cool stock, PLTR. So yeah, Palantir. This is a debt-free company. So Palantir has no debt whatsoever. And oh wait, hold up. What's this? Palantir surges as NATO buys AI powered. Okay, anyway, yeah, a lot of government's revenue a lot of Palantir's revenue comes from the government, literally 55%. And look at the growth here. You can't make this up. It's up 41% year over year, literally to a new record. So Palantir, incredible government growth. Same with the commercial revenue, it's up 31%. The valuation is a little high on Palantir, but they deserve it. I wouldn't buy them right here though, but they also have an incredible balance sheet. Like I said, no debt, 5.3 billion of cash. So geez, Palantir is a monster, man. Oh, yo, what up? Ethan said PAOI. Yeah, let's check it out. Yo, I'm reading both the YouTube and TikTok chat. Hey, yeah, if y'all want to support me, head over to the YouTube channel. I'm streaming on there as well. If you missed anything, you can replay it. My YouTube channel is called Nathan Roberts, also in the link tree in my bio. So here's PAOI. They have an $8 million market cap. This one, again, looks super risky. The whole company's worth $8 million. I just can't buy this kind of company. And look, the revenue's 600,000, and they're losing millions every quarter. So yeah, I would just be very careful with that one. Hey, what up, Q? What's up? How's it going? It's all good. Um, hey, oh yeah, and I thought Nvidia would be up. Yeah, let's check out Nvidia. I really like this company. Would you recommend buying Nvidia or Palantir today? Well, again, none of this is financial advice. I can't recommend anything. But if I had to pick one, I'd probably pick an Nvidia over Palantir right here. So here's what I love about Nvidia. It's probably the safer bet. Like, look at their PC GPU market share. Nvidia has an 18% GPU market share. Their automotive business just keeps on growing. They partner with WeRide, GM. But here's why Nvidia deserves all the hype. It's unbelievable. Their business, their sales are up 101%. So Nvidia's revenues at a new record. Until this growth goes away, I mean, I would just keep on holding this stock. They literally made 22 billion of net income just in one quarter. I mean, at this growth rate, what's it going to be next quarter? So anyway, Nvidia's great growth company, and Nvidia literally owns some individual companies. If we go to Nvidia's portfolio right here, remember their automotive revenue? Well, that's from WeRide right here. Nvidia took a huge stake into WeRide. Stock goes to $44 off that, then they're back down to 10. I wouldn't buy WeRide, but Nvidia has a stake in them. Nvidia owns some RX, APLD. APLD reports earnings today, in 3 hours, and they own some ARM as well. So that's interesting. Anyway, let's keep looking at stocks here. Yeah, Nvidia's a cool one. I would rather buy them than Palantir if I had to pick one. So, Yo, Quay said ULTY. Is that a covered call ETF? So yeah, this is one of the super high yielding dividend stocks. I don't even believe this. This is saying they have 193% dividend. So with these kind of companies, oh yeah, so they just sell calls on all those stocks. So yeah, you'd buy that to maximize your dividend income, but you're not going to outperform the market on a total return basis. Um, Let's see. CRWV. Let's see. Oh yeah, CoreWeave. Yeah, CoreWeave. They just IPO'd. Nvidia took a $300 million stake in this IPO right here. Unfortunately, since they just IPO'd, I can't really give you any thoughts on them. All we can see is the most recent quarter, and in the most recent quarter, they had 700 million of revenue, which is really impressive. Yo, Javier, no way, dude. Thanks so much for the rose. I really appreciate you. Yeah, yeah. He said thoughts on SoFi stock. Yeah, I got you, dude. Thanks again for the rose. I absolutely love SoFi. They're a fintech. They have their own banking charter. They actually got their banking charter through a loophole. They're impossible to get now. And look at, but here's the best part about SoFi. They're a growing company. Their financial services business is up 85%, literally to a new record. So this is an incredible growth rate. What's it going to be this time next year at this growth rate? And also, SoFi is now making net income. If we zoom out on this company, they used to lose like 100 million of net income a quarter. Well, now people are starting to take SoFi serious. They're making net income every quarter. And again, I might be biased on SoFi. Oh yeah, here's my position. We were just looking at them. I don't own much of them just because they're really risky, but I do own 24 shares of SoFi Technologies. So yeah. Yeah, thanks again for the rose. Um Dirk, yeah, I got multiple portfolios here, Dirk. Yeah, let me show you my Robinhood. I'll be quick about this because I want to look at more stocks. Yeah, we're down, or I know we're up. We were almost down. We're up 0.27% on the day, but we're down from earlier this morning. We were up over 1% at one point. Yeah, here's my dividend portfolio. Here's every stock I own in here. And here's my total percent change. We're down on Google, United Rentals. I like being completely transparent. By the way, I don't sell anything. I don't have a course, book, WhatsApp, Telegram, Discord. I'm just on here giving my opinion. The only way, if you want to support me though, the only thing I do have is a YouTube channel. I'm streaming on YouTube and TikTok. So if you subscribe to my YouTube channel, that means so much to me. Anyway, let's keep going here. Ooh, someone said INOD. So, yo, what up, September? This is a stock I do own. Actually, let me go back to my Robinhood portfolio. I own that one in here, and I own that in my Roth IRA. So, look at our Roth IRA. It's down 3% on the day. Not too great here, but that stock is down 7% on the day. This is a high momentum stock. I mean, I'm only up 3% on my shares, but let me show you why I love this stock so much. They have no net debt. Their main customers are literally Nvidia, Amazon, Google, Meta, and Microsoft. Those are their 5 main customers. And look at their revenue growth. It's ridiculous. It's up 161%, literally to a new record. They have no net debt, and they're making net income now. So they checked all the boxes for me. Again, you don't want to put a lot of money into that kind of company, even though the fundamentals are great, I think. You just can't risk a lot of money in that kind of company. Yo, B Mills, what's up, dude? Have you been buying anything? Yeah, I'll be quick about this. I've been buying every time I buy a stock. You can kind of see where I've been buying. I just made a whole position in Amazon. I've been buying APH stock. Ooh, and I guess my most recent purchase in here was actually ticker symbol Cube. This is Cube Smart right here. Someone's asking about dividend stocks. Here's my highest yielding dividend stock, and it's this company right here. They have a 5.4% dividend yield. In my opinion, it's completely sustainable. So stocks aren't back. Yo, we've been streaming for a while. I thought stocks were back, but yeah, we're now red. Look in the top right there. We're down 0.37%. So unfortunate. Someone, Riley said, thoughts on nano nuclear energy. So if we go to the nuclear energy stocks right here, where is that? Let's see if nano nuclear is on here. So they are not on here. So actually, I think nano nuclear is the startup, but I'll give you some analysis on them. They kind of move with all the other nuclear energy stocks. So yeah, if we go to the revenue right here, it says no data because this is a startup. They've never sold a product or a service. They never sold anything. And if we go to the revenue, their net income, they're just losing net income every quarter. So yeah, I would rather buy a different nuclear energy stock. Again, this is just a startup. They don't have any revenues. I'd rather buy a CEG, and I do own a CEG. This stock right here, if you want exposure to nuclear, this company right here owns 50% of all the U.S. nuclear energy reactors. It's the largest pure play for nuclear energy, CEG. And I'm down on the position. I'm down 0.64%. Look at them. I thought they were at a pretty good valuation. I mean, again, not financial advice, but they're down bad the past 3 months, down 27%. Zoinks. Oh, dude, McDonald's. Wow, dude, y'all heard of that Minecraft McDonald's meal? It's they had so much free marketing. It's doing great for McDonald's. McDonald's is nearly at an all-time high. McDonald's is an interesting royalty real estate company. Yo, so someone's been saying ET right here. I'll be super quick. Don't buy this stock right here, in my opinion. This company gives you a complicated K1 tax form. It's not even a stock. It's technically you're buying units because it's an MLP. So if you buy this stock, they're unlike any other. You get a complicated K1 tax form, and when I first started investing, it costed me $300 with an accountant to get it filled out. So unless you have over like $1,000 in this stock, please don't buy it because you'll get that weird tax form. It's one of the only stocks that do that. So, but because they're an MLP, they have a super high dividend yield. So you get like 8% of your money back in a dividend. That's because they're an MLP though. So yeah, besides the complicated tax form, I do like that stock. Oh, hey, yo, Mike. This is actually a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link there. It's free. What are your favorite long-term holds? Amazon. Again, none of this is financial advice, obviously, but I like Amazon, Google, Microsoft. Great holds. SQQQ. So yeah, this is the triple leverage QQQ ETF, I believe. Or no, this is the short ETF. So basically, whenever the Nasdaq goes down, this goes up. And I guess the long-term trend has not been too great on this. You want to short-term trade this. You don't want to hold this for the long run ever. You just want to short-term swing trade this. So yeah, that could be a. What's your end of day prediction for Nvidia? I have no clue. I'll go check Nvidia real quick. Let me go to the watch list down here. So here, Nvidia's down on the day. Look at that. They were up this morning, up 3% at 114. Hey, I don't know. Maybe they'll close back at like 112. I have no clue though. Hey, the SPY just had a little bump. Let me go back down here. The S&P, look at that. We're seeing a little bit of an intraday recovery. So, oh yeah, and also someone's saying, what are your best long-term holds? All the stocks that I own in here, pretty much. Again, not financial advice. I've owned a lot of these stocks for well over a year. I've held so many of these stocks for well over a year, like a Salesforce, Meta, Google, McDonald's, the Constellation Energy, Carlisle. Like I was buying these like years ago, and I just keep on holding them. I know no real reason to sell them if the fundamentals are still good. Yo, what up, Jim? How doing good, friend? How about you? Ooh, TMC, is that? Ooh, this is the metals company. So they're up 27% today. I looked at the news. There's no news. This is another startup right here. So unfortunately, they make these robots that go underwater and suck the cobalt out of the cobalt, gold, nickel, all these minerals. I've looked at their investor presentation. I actually used to own this stock and I sold it just because I can't trust my money with them. Because look at this, they have more debt, they have more liabilities and assets. They literally have no revenue right now, and they're losing a lot of net income right now. But the company's fascinating, but they just haven't executed yet. But yeah, they make these underwater little robots that suck minerals out of the water. So anyway, yo, Sosa, this is a brokerage right here. Yeah, if you want to get this brokerage, it's in the link tree in my bio. It's the very first link there. It's free. Yeah, you can track like super investors' portfolio. Like Buffett, Buffett's portfolio is doing good. He owns Apple, American Express. He owns a lot of the higher yielding ones like Coca-Cola, Chevron, Bank of America, Kraft Heinz, Lunchables. That's funny. Anyway, let's keep looking at stocks here. So check Tesla. Yeah, what up, Shane? TSLA. So Tesla, this is a mixed bag right here. There's some good news and there's some bad news about Tesla. So the bad news is, look at their total vehicles delivered. It's actually down 13% year over year. We can kind of see their deliveries by model and stuff. But they traded this really high. They traded 121 times net income, but they just lost their growth. So if we go to the automotive business right here, look at this. Unfortunately, it's actually down 5%. So it's a little hard paying such an expensive valuation. But again, it's Tesla, it's Elon. It'll always trade at a high valuation. But there is good news. Look at their energy business, for example. Now, this is good growth, and I like to see. I guess in the future they'll have the robo-taxi network, and which is supposed to add to their market cap, and the robots or whatever. But for right now, they don't have any of that revenue. So I'm not buying Tesla right here, but I don't hate them though. Oh, yo, T-Coy said TTWO. So this is the company. Has anyone heard of Rockstar Games? This stock right here owns GTA 5, GTA 6, Red Dead Redemption. And GTA 6 is about to come out. It's supposed to be a huge revenue driver for this stock. Look at it. The stock's done incredible. They're at an all-time high right now because they said they're going to release GTA 6 this year. Because right now, the revenue is terrible. The revenue is down year over year. But whenever the GTA 6 comes out, it's anticipated to bring so much growth to them. So, yeah, I can't wait for that game. What do y'all think? How about Honda? Is Honda publicly traded? I'm confused. Did Trump erase the tariffs on tech? I'm not sure, Marcus. Yo, I haven't really looked into the news too much today. But I mean, hey, the market's kind of recovering. I mean, if we look at the S&P right now, it's up 0.75, obviously down from this morning, but still green, which is good news. Yeah, here are the stocks that we own in here. Ooh, OSCR. Let's check that one out. Oh yeah, we can look at BULL as well. Aren't they up like 300% or something ridiculous? So this is a health insurance company, and they have some of the most impressive growth I've ever seen. Look at the annual sales. In 2019, it was 500 million. Now it's 9 billion. That is nuts. So incredible growth. But here's the reason why the stock has kind of been flat. It's because they're trying to stay net income positive. Like they actually just lost 153 million. So they need to get net income positive and fix their margins, but as long as they can keep up that sales growth, I mean, it's okay that they're losing money. That's incredible sales growth. So yeah, whoa, this is look at this stock right here. They're up 450%. So yeah, Bull, this is Webull right here. That's another brokerage. It's actually this brokerage right here. Hey, I'm a customer, so hey, I'm supporting them. But yeah, that's this app right here, publicly traded. So they literally just IPO today. They're up. I wouldn't chase this one. They're worth wow, 33 billion. That's whoa. Are they worth more than Robinhood? That can't be right. Hold the phone. They're worth 38 billion. Robinhood and Webull are worth the exact same amount right now. Hey, it's a battle of the brokerages. I also have the Robinhood brokerage. That's actually nuts. Wow. And hey, I own Robinhood as a brokerage. Anyway, let's keep going here. I haven't since I just IPO'd, we can't really see the fundamentals yet on them. Um, let's see. Oh, Target stock. Yo, what up, MO? So TGT. Yeah, let's check out Target right here. So this is, they're not just a grocery store. Like they sell a lot of other stuff, which is why I think they're getting hurt. Like, look, only 23% of the revenue from food and beverage. Then they're in household essentials, home furnishings, so apparel, hard lines, beauty. So anyway, this if you buy Target, you get an incredible 4.7% dividend yield. This payout ratio is a 50%, so the payout ratio is sustainable. But here's kind of why I think Target fell. Like, look at this. The revenue was down 3, but the net income was down 20% year over year. So their net margin fell 17% year over year. So I guess they just lost their growth. That kind of explains why Target hasn't done too good. And that's unlike the other. This is like a more pure play for grocery store. Look at Walmart. Walmart's at like an all-time high right now. So I guess because Target sells things like apparel and beauty, that's why they're doing so bad. If we look at any of the beauty stocks, like an Estate Lauder, look at this stock. They're at an over 5-year low. This is one of the main beauty stocks. I mean, if we look at where the revenue comes from, skincare, makeup, fragrance, a lot of their products are in Target. Or like an Elf Beauty. Elf Beauty stock's fallen off a cliff, unfortunately. Um, Let's see here. Yo, what up? Fruit T said STX. Is that Constellation? No, this is Seagate Technologies. So, $15 billion company trading at a low valuation. Let's see. If we go to the PE right here, they're trading at a 13 PE. So that's pretty fair. So manufacturing and distribution. Ooh, so that's not great. Ooh, that is really not good. So it looks like the sales are down or wait, that was kind of old data. Wait, yeah, that was from Q1 2024. So if we actually look at their sales right here, it is up 49% year over year. So sorry, that was old data. And wow, look at the net income. They're actually, whoa, they're making a lot of net income right now, and that's real. So they do have more liabilities than they have assets. Wow, you get a 4% yield. The payout ratio is a little high. I need to do some more research on them. Looks like the growth is coming back though, so that's good news. Oh, yo, Stellar said PayPal stock. Yo, you know who just bought PayPal stock? And I'll show you that. Nancy Pelosi just bought PayPal. So if we go to Nancy Pelosi's portfolio right here, that's actually her second most recent purchase was PayPal. So let's go check them out. So I really love this company because the valuation is so low. PayPal's trading at 15 times net income. That's a lower PE than the 2020 pandemic. Their total payment volume keeps on growing, 473 billion of total payment volume. And look at the net income. They pretty much make $1 billion of net income every single quarter. It was down year over year, but that's probably why the stock is down a little bit because the net income was down a little bit. But yeah, they're making so much free cash flow as well. Literally easily over 1.5 billion of free cash flow a quarter. So PayPal's one I wouldn't put a huge amount of money in them, but I think they're a safe buy. They're a value stock, low value. They're doing incredible buybacks. PayPal buys back so much of their own stock a year. They buy back like 6% of the company a year. So Mo said Nike stock. I feel bad, homie, because I actually just completely sold out of Nike. Unfortunately, I did it at a good time. I sold all my Nike for an 8% loss of 79, and now it's at 55. Unfortunately, Nike has just lost all their growth on all metrics. They lost the sales, they lost the growth of their revenue, lost the growth of the net income. It's down 32%, and the margins fell 25. They only have a 7% net margin right now. So Nike really needs to turn things around there before I want to buy more of them. But I do like their brand. I'm like emotionally attached to them. But uh, so let's see. Thoughts on ARIO IPO? Whoa, what's this one? ARIO IPO. I wish I could view it. I'm looking it up and I can't find that one, unfortunately. Oh, and a line said MGM International. So, is that ticker symbol MGM? Here we go. MGM Resorts International. So yeah, they own a lot of, you know, I can't say the word, but oh, look at that. So look, yeah, a lot of properties on the Las Vegas Strip. So half the revenue comes from the Strip. Then MGM China, MGM Digital. So let me check out the bottom line here. So yeah, look at that. They're actually making a lot of money. Look at that. MGM's making 200, 300 million of net income a quarter. They don't pay a dividend, but they don't need to pay a dividend. They can probably just buy back their own stock right here. So actually, the fact that they're making net income every quarter, trading at 12 PE, that's a normal PE ratio for the hotel business. But yeah, actually, that's right. Yo, John, no way. What's up, man? So John said SUN. I think this is a solar stock. Or no, Sunoco. So wow, the stock is at like an all-time high right now. So congrats if you own them. You gotta be up. Wow, and on top of them being at an all-time high, you get a 6.4% dividend. So that's really impressive, actually. So fuel distribution. So yeah, they're in the oil and gas industry. Yeah, if you average out the 4 quarters, they're making net income every quarter, and the payout ratio of the dividend was safe. So, yeah, I see why this one's doing great. I mean, the fundamentals are pretty good, and the yield is still nice there. Um, what is this one? Marcus said thoughts on NVO. I'm pretty sure Eli Lilly. Yeah, so this is the thing that's so unfortunate about NVO. This is the company that owns Ozempic. I don't know if anyone's heard of that like weight loss prescription. Well, the patent for Ozempic actually expires in 2026. I didn't know that. I think that's why the stock is hurting so bad. And they're already seeing a lot of increased competition from like Eli Lilly and Hims. But or Hims can't sell it anymore. But they're for right now, NVO's numbers are great. They're making 3 to 4 billion of net income a quarter. You get a 2% yield, very safe payout ratio for the time being. But I think it's kind of pre-pricing in the lost growth. But I'm not sure. Only time will tell. Yeah, here's my portfolio today. Again, none of this is financial advice. Don't listen to me. I'm down a lot of money on a stock. Make sure you DCA into a high quality company. And again, I don't sell anything, by the way. I don't have a course, a book, WhatsApp, Telegram, Discord. I'm just on here giving my opinion. Watch out for people impersonating me. If you do want to support me, though, the best way to support me is just subscribe to my YouTube channel. I'm streaming on YouTube and TikTok. I'm reading both chats. I read the YouTube chat first, but yeah, it mean the world to me. Also, yesterday marked my 3-year investing anniversary. So I've been investing for exactly 3 years. I just made a YouTube video, 3-year portfolio update. If you want to check it out, made it yesterday. Thanks again. Let's keep going here. Hims is doing all right. Yeah, dude, Hims is debt free. They're a great company. So let's look at Nvidia right here. I love Nvidia stock. And the fundamentals are great here, in my opinion. This is why I couldn't be selling Nvidia. Look at the net income. They made 22 billion of net income just in the most recent quarter. If we zoom out, this company used to make under a billion. So they've really turned things around, and it's still growing. So at this growth rate, what's it going to be next quarter? If it's 22 billion this quarter, what will it be next quarter? Who knows? But I love the growth there. They always surprise investors. And check this out right here. They have a huge GPU market share with Nvidia. You get an 18% GPU market share. Their automotive business keeps on growing. Nvidia is constantly partnering with a lot of companies like GM and Cadillac. And WeRide, for example. So if we go to NVIDIA's portfolio, like the stock NVIDIA owns some companies, NVIDIA owns a lot of WeRide, for example. I wouldn't buy this stock personally, but you can kind of see when NVIDIA took a stake. They went to 40, back down to 8 now. But yeah, that's a cool story about NVIDIA. Let's see. Is Eli Lilly a good buy? I honestly think so. I don't Let's actually check LLY right here. So yeah, they're a $750 stock. This is a great healthcare name in my opinion. So let me show you this. I love how diversified. If this doesn't impress you, feel free to leave. This is so impressive in my opinion. Eli Lilly sells all these different prescriptions. Like look at just this main one right here, Mounjaro. It's up to 3.5 billion, up 60%. The next one, Verzarinio, whatever, it's up 35%. Look at Zepbound. Literally a year ago, the sales were 175 million. Now it's 1.9 billion. This is their weight loss Ozempic copy. So they can literally just make prescriptions and then they just get billions of sales. So it's just nuts. They have a super safe dividend as well. So Eli Lilly, I do like the growth on that one. Hey, what up, New York? ACB finally has a great numbers. Let's check it out. And what up, XYT? Um, uh, What path did you take learning the markets? What do you recommend? Hey, XYT, I just recommend buying the S&P 500, you know, as for the backbone of your portfolio. Again, not financial advice. So here's ACB right here. This is a Leaf company. They're worth $230 million. They're a Canadian company. So yeah, they're in these operations. I can't say that word, but let's see. Was so look, they made 21 million. That's real net income. So they really made 21 million of net income. So it looks like they really fixed their margin. The free cash flow is 16 million as well. So if they can keep this quarter up, let me check that out. Were analysts expecting that? No, they blew away expectations. So if they can keep that up, that might not be, I wouldn't put a lot of money into them. But yeah, XYT, if you got a stock you're gonna look at, let me know. I got you. That probably wasn't too helpful of an answer, but I would stay away from a lot of the risky stuff. Stay away from the small market cap. I like to stay away from crypto, but if did buy crypto, I'd just buy Bitcoin. Yeah, these are all my favorite stocks. Like these all pay a dividend. I got McDonald's, Google, Meta, Salesforce, United Rentals. The Ozemic pattern only expires in 2026 in China, 2030. Oh, thanks for that context there. So maybe I was wrong about that. Ooh, Alex said thoughts on Costco. This is one of the top holdings in the QQQ. So or in the Nasdaq 100. I really love Costco. You buy things in bulk, so you get like a good deal on their stuff. And the thing about Costco is, they have you can't get into the store without a subscription. So they have a nice subscription model, reoccurring revenue. They literally just make like 2 billion of net income a quarter. They have a nice dividend. They even sometimes do special dividends. They have incredible stock price appreciation. So yeah, Costco is really cool. Um, what about Amazon? Yeah, I do own some Amazon right here. I just recently took a huge position into them. Again, I only got 10 shares, but I love how diversified Amazon is, 38% of the revenue, online stores, third-party seller services, then their AWS. This is what brings most of their bottom line now. Their Amazon Web Services is the largest market share, 107 billion of revenue, ridiculous. Then they own Twitch, twitch.tv if anyone's heard of that. They're an advertising business. They have their subscription, they have physical stores, but the best part about Amazon here is the bottom line. They made 20 billion of net income just in the most recent quarter. I mean, that's incredible. So that's why I own them. Um, Let's see. Thoughts on buying US bonds? If I wanted to buy a US bond, I'd buy TLT right here. This is the US 20-year Treasury. What's the yield? 4.3% yield on this ETF. And whenever interest rates go to zero, if one day, I believe interest rates will be at 0% one day, this ETF, the 20-year Treasury will be over $110. Because it's the inverse. So TLT is the one I like. It's the US 20-year Treasury bond. Um, Let's see. MSTY. Yeah, I would not buy MSTY. I mean, if you wanted to buy, this is a covered call ETF right here. You buy this stock to maximize, or do you buy this ETF to maximize your dividend income, but you lose so much stock price appreciation. I look at them in the past year, they're down 42%. So yeah, you get the nice dividend, but you just buy that to maximize your dividend income. You won't outperform the market in the long run with that kind of ETF. But yeah, I think they have like a crazy 80% dividend yield. So yeah, how do you feel about Canadian banks, TD? So actually, there's like a Canadian bank ETF. I forget what it's called, but actually, let's check out TD for example. Let's do some individual analysis on them. So let's see, the personal banking. They're in wealth management insurance. That's up 6%. U.S. retail. So the U.S. retail business is not doing too good. But what about the net income? So yeah, actually, if you look at the net income, they're usually just making 2 billion of net income a quarter. They also have a nice 4.7% yield. So they seem safe. What about the top ETFs? We can view the top ETFs that. Oh, guess we can't. Oh well. What is this one? Hims. Oh yeah, we can. Yeah, we can look at Nike too. I won't spend too much time on Nike. We've already looked at them a couple times. If you're missing anything, you can replay the live stream. I'm streaming on my YouTube channel as well. We'll look at Nike after this. I'll be super quick about it though. But here's Hims and Hers. I love this stock. They actually have no debt. This is a completely debt-free company. And look at this right here. Actually, this is why they deserve all the hype. Look at their sales. The sales are up 95% year over year. That is impressive growth. So, and they have no debt. They have a monster balance sheet, no debt with 300 million of cash. Look at that. They're making net income every quarter, free cash flow every quarter. Actually, I have a watch list of a bunch of stocks with no debt. So Hims is in this watch list. But yeah, if you've maybe heard of DocuSign, Sprouts Farmers Market, Duolingo, Pinterest, Opera GX browser, Zoom, Reddit. Yelp. They're all debt-free companies. I own some Yelp stock. Anyway, let's keep going here. Yeah, so Nike, here's why in my opinion, I'm just avoiding this one. It's just an apparel company. I actually just sold all my Nike stock for an 8% loss, but good thing I sold it at $78 because it's at $55 right now. So, I do I I do like them, but I wouldn't buy the stock right now. I just be careful. I do like Nike though. Stocks under $50. Well, hey, the stock price doesn't matter because you can buy fractional shares. So if the stock price is like Amazon, it's $180. You can just buy zero point 0.5 shares or zero point 0.1 share, which is cool. But yeah, let's see. What about BYD? Yo, BYD, this is like the Chinese Tesla competitor. They actually make more net income than Tesla does. And if we didn't have tariffs on China, Warren Buffett and Berkshire Hathaway own a lot of BYD. They own a lot of this company. But yeah, the stock's done amazing. It's because they're actually printing net income, more net income than Tesla did for the full year 2024. Is Microsoft good long term? I absolutely think so, man. Microsoft is such a great company. You just buy and hold this one. You don't trade it. You don't really do options. You just buy shares and hold Microsoft. So check this out. Here's what's so cool. The PE ratios at a historically fair PE, 31 PE. We can see their premium subscribers. But look at this. I love their intelligent cloud business. If anyone heard of like Microsoft Azure, it's up 18% year over year, so incredible growth there. They have three main segments of business, but the best part is the bottom line. Microsoft is literally making 20 to 25 billion of net income every quarter. They also have a nice dividend. You get a 0.9% yield with Microsoft, so they're great. Just buy and hold that one. Yeah, dude, Nike's already being hurt from just their organic sales decline, but also now tariffs are going to double hurt them. Like their revenue's down bad, and they haven't even been hurt by tariffs yet. So I'd be careful with that. Are you using Yahoo? No, hey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the very first link there. Yeah, you can track like all the super investors' portfolio and stuff, like Kathy Wood's portfolio. Yeah, she owns Tesla, Robinhood. Oh, dude, actually, Shopify. This is a company, not financial advice. I'd recommend to put on the watch list. So check this out. If we look at Shopify's revenue right here, you can't make this up. Their annual revenue in 2018 was 1 billion. It's now 8.8 billion. It's at a new record. So incredible Shopify growth. Yeah, this is a brokerage right here. If you want to download it, it's in the link tree in bio. It's the first link there. It's called Mumu. But yeah, and it's free. And look at Shopify as well. They're making so much free cash flow every quarter and net income. They're now a net income positive company. So Shopify is a nice growth name that I just hold for the long run. What about Dole? Yeah, has anyone heard of DOLE? They make those fruits. They sell like fresh fruits, like fruit cups and stuff. But yeah, here's Dole right here. Yeah, look at that fresh fruit, diversified products. So yeah, that's pretty cool. They just sell commodities. But look at that, the net income. I don't know how they'll get affected by tariffs. I think this one might be based in Mexico. I'm not sure, but for right now, this net income is so impressive. They're making like 50 to 80 million of net income every quarter. So that's really impressive. The sales are down zero point 0.8, but the net income was up. So it means they're growing their net margin. Pretty cool. So anyway, let's keep going here. Name of this site. Yeah, hey, no, this is a brokerage right here. Sorry, if you want to download this brokerage, just go to the link tree in my bio. It's the very first link there. It's free. It's called Mumu. What about AMD? This is another stock that I own. Here's AMD. Now, there's some good news and bad news about AMD. So I'll go over the good news first. I mean, look at their PC GPU market share. You get a 16% GPU market share with AMD, so huge market share, but this is really a data center business. Look at this. 50% of the revenue now comes from their data centers, and look, so if you're looking for exposure to data centers, AMD could be a good play. I own some of them, but look, the revenue's up 69% year over year, so incredible growth on data center, and the client revenue as well is up 58%. So both of their main segments of business are growing. But if we look at the small revenue right here, their embedded revenue, this one is down quite a bit. Look at that. They're down from 2023. But again, small segment of their business. But this is the best part. They made over $1 billion of free cash flow in the most recent quarter. Incredible free cash flow numbers. Operating profit was at a record, and they have the monster balance sheet. Literally no net debt on AMD. So they're very cool. Oh yeah, we also have let's say we're up 0.52% in the Robinhood. Again, we're still down bad year to date. We're down 8% year to date, but we're seeing a nice little recovery. McDonald's is up 2% on the day. Nice. So what do you think about RXRX? Yeah, that's one of Nvidia's stocks. So let's Let's check out Nvidia's portfolio right here. So honestly, this is a company that I would avoid. This is 18% of Nvidia's portfolio, but I'll show you why. I'll show you the numbers for yourself. You can just draw your own conclusion because this isn't financial advice. But look at this right here. The revenue there is so bad. They only had 4 million of revenue in the most recent quarter. But even if the revenue was like 20 million, this is the worst part. They're losing a lot of money. And it's getting worse. They lost nearly 200 million of net income in the most recent quarter. So I really need to see this company get net income positive. So yeah, they lost 400 million this year. Yeah, that's one fourth of the company they lost in market cap. Yo, what up, Daniel? How are you feeling about you? Good to see you. And Catherine, what's up? Yeah, thanks for stopping by the YouTube stream. Yo, I'm streaming on YouTube and TikTok right now. I'm reading both chats. And yo, she's so, thank you so much. Yo, I'm gonna give you a follow back. I really appreciate that. So anyway, let's keep going here. Energy Fuels. So this is, I believe, a uranium stock right here. So heavy mineral sands and uranium. Yeah, so half their business comes from uranium. Let's see, what is the revenue? So look, the revenue kind of just popped up. They are losing net income overall. They're losing free cash flow. I'd have to do some more research on this one, but there's like there's a uranium ETF that I really like, and I forget the ticker symbol. It starts with a U. Um, I like UEC too. How do you set time? I'm not sure what you mean there, Shane. What's up, dude? Bro, Wallet Connect. Is that? I haven't. Yo, sorry. Yeah, I'll try to get to all the stocks here. Yo, Zoe, what's the ticker symbol for Wallet Connect? I've not heard of that stock before. Yeah, yo, Reddit Knowledge said ticker symbol bull. So yeah, they just IPO'd today. They are up 400% right here. So this is Weeble. So yeah, this is Weeble stock. That's actually another brokerage. I have a Weeble account. Oh my goodness. Uh-oh, sorry. I just made my screen go horizontal. Anyway, yeah, Weeble's another brokerage right here. Anyway, they're up 440%. I would stay away from Weeble. I wouldn't chase the gains on that one, but congrats if you made money on them. That I can't wait to see what they do. They now have the same market cap as Robinhood. They have a $32 billion market cap. If we go to Robinhood stock, I think they're at like 35. Anyway, they're neck and neck. Um, let's see. We can also look at Reddit. Yo, I actually have recently bought a lot of Reddit. I'll be really quick about this. A lot of people think Reddit is just like a meme stock, a joke, but I have a small position in them. And yo, Casey Rose, thanks so much for the rose. I really appreciate that. If you got a stock you want to look at, let me know, Casey. Oh yeah, we'll look at Meta. Oh, bet. I got you. We'll look at Meta after this. So here's Reddit. I do own a couple shares, but here's the best part. The growth, like ignore that the name is Reddit. Just look at the growth of the sales. The sales are up 71% year over year, and they have no debt. Look at this monster balance sheet. No debt whatsoever, and the assets are at a new record. I think they have 1.9 billion of cash. Let me check. 1.84 billion of cash with absolutely no debt, and the sales are up 75%. So hey, that's why I own 4 shares of Reddit. They're cool. But let's go check out Meta. I do own some Meta stock as well. I'll give you a quick analysis on them just because I love them. I might be biased because I own them, but check this out. The PE is really fair. The valuation. Yo, she's so sorry. Um, wait, she soars T. I'm so sorry. I'm pronouncing her name wrong, but thanks so much for the heart there. But they have a 22 PE. They're trading at 22 times net income, which is historically very fair valuation for Meta. Look at their active users. They have 3.35 billion daily active users. So incredible. They own Facebook, Instagram, but look at the bottom line. They made 21 billion of net income just in the most recent quarter. The sales were up 20 and the net income was up 48. So that means they're growing their net margin. The net margin is now a 43%. That's so incredible. Like they're a huge advertising play. They own Meta, Ray-Bans, Oculus. Hey, with a sub, much love. Best way to study. Yo, Daniel, hey, thanks so much for the sub. Yo, if y'all want to support me, I don't sell anything, by the way. I don't have a course book, WhatsApp, Telegram, Discord. All I have is a YouTube channel and a TikTok. So if you want to support me, if you're on the TikTok stream, all I ask is you subscribe to my YouTube channel. I'm streaming on there. If you missed anything, you can replay it. And also, yesterday was my 3-year investing anniversary. So I started investing exactly 3 years ago. So I just made a stock portfolio update of 3-year kind of update. Yeah, look at us. I just like being transparent. Look, we're down 8% year to date, up 3% the past year. But yeah, look, we are seeing a nice little recovery there. Yeah, you're right, Elliot. I do like that. We're still down 0.3% in this portfolio. So can you do ASML and Alibaba? Yo, let's look at ASML. Yeah, remind me to look at Alibaba. I got you. That's another one I like. So ASML, they're the chip making manufacturer. They're a European company. But here's the best part about this company. The most recent quarter, they made 2.8 billion of net income. So they made 2.8 billion of net income. That's a record. If we zoom out, they've never made more net income than they did in the most recent quarter. So and that's weird because the stock price is so heavily hurt right now, yet the company's fundamentals are at a record. So I don't know if maybe they gave bad guidance or something, but they have a 1% yield. Everything seems great here. They have some customer concentration. They only have three main customers. It's Samsung, Intel, and some other one I forget, but let's see. Yo, what up, Danny? No, portfolio's in shambles. What happened, Danny? Dang. Oh, yo, look at this stock right here. Oh, dude, this company's going bankrupt. Does anyone remember HelloFresh? Oh, dude, HelloFresh is going bankrupt. They're only worth $1.4 billion now. Stock's at an all-time low. HelloFresh was a $25 stock. Now they're $2, and they just burn net income. Anyway, oh yeah, Alibaba. That's a Chinese stock. So if we go to the Chinese companies right here, Alibaba is my second favorite Chinese stock. They're basically the Chinese Amazon. Um, they're up 6% on the day. Pretty nice. And look at the PE. They're trading at a fair valuation. They're trading at 16 times net income. It's pretty normal for the low valuation on a Chinese stock. But look, they're making a lot of net income. 6 billion the quarter before, then another 3 billion. So they're easily making over 10 billion of net income a year, easily over 10 billion of free cash flow a year. And what are their active customers? They got 903 million annual active customers. So anyway, I like Alibaba. My favorite Chinese stock, and I don't own this one either, is Tencent. Has anyone heard of Riot Games, League of Legends? They own Supercell. They own PUBG. They own 50% of Fortnite. That is Tencent. They're a huge gaming company. They're worth 550 billion. They own Riot Games. They're huge. That's Tencent. They're Chinese, but anyway. Let's keep going here. Amazon is yeah, dude. Amazon, AWS. I do own Amazon, so yeah, I own the American Alibaba, which is Amazon. So yeah, Amazon's huge in their AWS business. What? Oh, hey, Max, this is a brokerage right here. If you want to get this brokerage, it's in the link tree in my bio. It's the first link there. It's free. And oh yeah, this is where I like to park my idle cash. Like if you look in the middle of my screen, I got $500 of cash. Earns a nice little yield. So let's see. What do you think RHM will get to 2,000? What is this stock right here? RHM. I looked that stock up. Unfortunately, I can't find it for you. I apologize there. Um, CVE. Oh yeah. Hey, thanks again for the rose there, Kasi. So CVE. Let's see. Synovus Energy. So they're a $21 billion company. They're a Canadian company. Unfortunately, this stock has just not done too good. Um, Actually, they're up from 2019 though, but if we kind of zoom out on the monthly, that's kind of normal for the oil and gas stocks. But let's see. They do oil and refining, oil sands, Canadian refining, offshore. So what about the bottom line? So the good news is they're making net income every quarter. I mean, it did fall. Oh, that was a one-time adjustment. So yeah, they're usually making 800 million to a billion of net income a quarter. What's the yield? Yeah, you get basically 5% yield. It's safe. So yeah, this could be a cool oil and gas stock. I like Chevron and ExxonMobil. Yo, what up? Like, what's your opinion on buying 2x leverage Amazon? Um, so yeah, I would rather just buy shares of just normal Amazon. But if you wanted to, I would buy normal Amazon and then maybe buy a few shares of that as a hedge. But the thing is, like, I just don't like the leverage ETFs. Let's see. Can you recommend a stock to get into? No, again, none of this is financial advice. Don't listen to me. Like, look at this stock right here. You could lose a lot of money on a stock. I recommend if you want to buy a stock, you should DCA dollar cost average into them. I dollar cost average into this one, and they're still at an all-time low. But if, some of my favorite companies are Amazon, Google. I just recently bought a ton of Amazon right here, 10 shares of them. I've been loading the boat on Comfort Systems. Oop, that's the wrong stock. Oh, here's the most recent stock I bought, CubeSmart right here. This is my highest yielding dividend stock. I love dividend companies, so this company right here actually is my highest yielding one. They have a 5.4% dividend yield, which is pretty cool. I've been buying a few more shares of them, but yeah. And actually, if I go back to my Webull portfolio, this is my dividend-only portfolio. Hey, look at that. We're almost back up 1%. So every stock in here actually pays a dividend, every single one of these. Even like Meta, even Google, even though the yields are really low, they're like dividend growth companies. But yeah. Oh, yeah, we also have our Roth IRA. Look, dang, we're down 2.5% in our Roth IRA. Yeah, we got 5 shares of Kroger. I really love Kroger. They're like a smaller Walmart, if anyone's heard of them. Uh, they're a great company, low valuation, 2%. Even if you buy them right now, which I just did, I'm only up 4% on them. You get a nice dividend, low PE, nice stock buybacks, and they're more than just a grocery store. They own a lot of oil and gas networks. They own a lot of other grocery stores and private brands. They own a bunch of farms themselves. They're so vertically integrated. Kroger's a really nice, really profitable company. Let's see. Uh, what up, Aiden? What is Sephora Energy? What's the ticker symbol for that one? Are you a future investor? Or I invest, I don't invest in futures contracts and I don't play futures, but I invest for the future. Yeah, in 10 years from now, I can't wait to see what my dividend income will be at that time. So yeah, Mary says, "MU, would you buy Micron?" So let's check out Micron Technology right here. They're pretty flat since 2020, but let's check out the fundamentals here. So they have a 0.65% dividend, which is pretty nice. So yeah, they're in the computer networking. They're like an Nvidia competitor. Wow, look at the growth here. The revenue in the computer networking business is up 108% year over year. That's phenomenal. I do like that. What about their storage business? So yeah, that's up 53% year over year. Mobile, that's down 33. So overall, it's net good. What about the net income though? Yeah, look at that. They're making net income every single quarter. Yeah, if we look at, they used to lose money every quarter, but now they're actually making net income every quarter. So as long as they can keep that up, I mean, MU is really nice. Can you explain a dividend? A dividend is just how much money you get back a year. So, like for example, you see this stock has a 5.4% dividend. If I invest $100 in this stock, I will get $5.40 back every year. Or I get paid it quarterly, but you get 5.4% of your money back a year, uh, which is pretty cool. It's basically the same as like APY. Like if you have your cash in a high yield savings account like this right here, it's basically dividend. But what's cool is like these companies grow their dividends, so you get like dividend growth behind them. Like a McDonald's is a fantastic dividend growth company. Like not only do you get the dividend, but you get the nice stock price appreciation. That new McDonald's Minecraft meal deal, they got so much free marketing from that. That was amazing for McDonald's. McDonald's is really a royalty real estate company. If you go spend $100 at McDonald's, 4% of it goes back to McDonald's. The stock is a royalty. They have like a sales and marketing royalty. So, yo, what 1-5? Thanks so much for the rose there, for the heart. I appreciate that. Let me know what stock you're going to look at. What platform? Hey, yo, Fazo, this is a brokerage right here. Yeah, if you want to get it, it's in the link tree in my bio. It's the very first link there. It's free. It's called Mumu. So, uh, five. Yo, I cannot look at that. I'll type it in, but I don't think that's a ticker symbol. 5218.KL. Maybe it was that one right there. Maybe I just looked at it. It's a Japanese company. I don't know. O'Hara. Yo, I apologize. I'm not gonna buy some over the seas company just for tax complications. You seen Weeble stock? Yeah, check this out. So, as y'all don't know, this app right, or this brokerage right here, Weeble, went publicly traded. Look at that. The stock is literally today, they're up 430%. I'm not buying the dip or there is no dip, but I'm not chasing Weeble stock. I mean, they're a cool brokerage. Uh, I want to see their fundamentals though. Right now, I can't really see the fundamentals, or can we? Are they doing 100 million of revenue a quarter? Nice. So, I'll look into them more when they've kind of died down. $20 a year, stock pays itself in 5 years and remains stable. Hey, yeah, what up, XYT? Um, oh wait, so it was Sephora. So, I'll look. Hey, thanks for being here, Aiden. You know what? I got you. Wait, Sephora. Oh no, that's not the right stock. All right, we can't find that one. Sorry. Um, let's see. NEE. Oh yeah, that's NextEra Energy. This is actually, if we go to the nuclear energy stocks, I love the nuclear energy industry. I think it's going to power the future, and I think NextEra Energy, yeah, that's the largest holding in here. So let's go look at NEE right here. They basically own all of Florida for utilities. So check this out. If you're in Florida, you've heard of it, Florida Power and Light Company. They literally own all of Florida as a utility play. They have a huge $100 billion market cap, but the best part is the 3% qualified dividend. They literally have a 3% dividend yield, low payout ratio. So yeah, that's great. And look at that. They're just pretty much making a billion plus of net income every quarter if you average it out. So yeah, NEE is a nice one. Nice dividend utility, nuclear exposure one. So I actually own CEG. I actually own the largest nuclear energy stock. This is CEG right here. I am down on them. Or no, I'm now up on them. We were down this morning, but They own 50% of all the US nuclear energy reactors. So that's my pure nuclear energy play. But I like NEE too. I think this one will just grow a little bit more. NEE has a really high yield. That one, CEG doesn't. Are you into any REITs, by the way? Yeah, I actually have been going over a REIT this whole time. Ticker symbol Cube. CubeSmart is a self-storage REIT, a real estate investment trust. I love the self-storage industry, and they pretty much own all of New York for the self-storage. You get a 5.5% yield, and because they're a REIT, that's that yields sustainable. Yo, what 1.5? Thanks for watching the YouTube video. I really appreciate that, man. Yeah, thanks you, man. Um, yeah, they're going to the moon right now. That's crazy. Encore, is there what? Let me know the ticker symbol. It's just incredibly undervalued right now, and the government offered to pay their debts. Really, Aiden? Oh, I wish I could find the ticker symbol for you. I do apologize. Uh, this is awesome content, amigo. Hey, I really appreciate that, XZ. Yeah, hey, we're streaming on TikTok and YouTube right now. So, if y'all want to support me, I don't sell anything. I don't have a course book, Discord. I'm just on here giving my opinion. Subscribe to my YouTube channel, and if you miss anything, you can replay it. So yeah, someone said ARKK. That's Kathy Wood's portfolio. If we go to Kathy Wood's holdings right here, if anyone remembers Kathy Wood, her portfolio has tanked since 2020. But you know what? Let's go look at it. Here's why Kathy Wood initially had so much respect at first. Y'all aren't going to believe this. So imagine comparing this to the S&P 500. This is what everyone used to look at for ARK. If you bought this ETF in 2019, look at the growth here. It was amazing. But now they have dramatically underperformed the S&P 500. Look at this on the weekly. I mean, the ETF's been nowhere for 5 years, unfortunately. But we'll look at their top holdings, though. Their top holdings is Tesla, Roku, Coinbase, Palantir, Roblox, Robinhood, Shopify. A lot of these stocks she used to not own. A lot of them have changed recently. But yeah, that's those top holdings. Yo, so Ellen said Nvidia. Yeah, let's check out Nvidia. Uh, let's see. So Nvidia right here is a great, semiconductor, data center GPU company. Like, look at this. You get a 18% GPU market share with Nvidia, which is really cool. Their automotive business just keeps on growing. Yo, what 1.5? Thanks for all the roses, dude. I really appreciate you for all the roses and the hearts. But the automotive business is at a new record. But here's why Nvidia deserves all the hype and the high valuation. It's the growth. They are growing phenomenally. And at this growth rate, what's it going to be this time next year if the sales are up 101%? And also the bottom line, the net income is up 80%. They made 22 billion of net income just in the most recent quarter. So just incredible. Wait, is this a trick question? What are your thoughts on putting all your money into one company instead of spreading it? That sounds so risky. Don't put all your eggs in one basket. You at least, in my opinion, at very least need to own 6 companies. I've looked at the bell curve of diversification. After you own 6 stocks, it starts to get exponentially less risky, but you need to at least own 6 in my opinion. But it could be an ETF. Like if you literally just said to me, I only own one thing and the only thing I own is VOO, which is the S&P 500, I'd be okay with that. The S&P 500 is a great ETF, and that's because they're so diversified. They have 500 holdings. It breaks their money up into Apple, Nvidia, Microsoft. So yeah. What app? Oh, hey, this is a brokerage right here. If you want to download this brokerage, it's in the link tree in my bio. It's the first link there, JJ. Yeah, I got you, JJ. We'll look at HIMS as well. It's free. But anyway, here's Hims and Hers right here. This is a debt-free company. They sell a lot of prescriptions right here. But look at this. This is the best part. Look at the sales growth. And the sales are up 95%. That is incredible sales growth for Hims. And on top of that, they're really profitable. Look, the free cash flow is up 450% year over year. Net income's up 2,000%. I mean, we're comparing to small numbers because if we zoom out, look, people used to not buy the stock. They were just losing net income every quarter. Well, now they're making net income every quarter. They have absolutely no debt. Their cash keeps on growing. They now have $300 million of cash. Their cash just grew $54 million. So Hims, that's from all the free cash flow. It's the free cash flow means it just adds to their cash. They have no obligation. They have no debt payments or anything to do. They can do buybacks or anything they want with that. So yeah. Tariff exemption for smartphones. Apple can't operate without China. Oh, that's exemption for all smartphones. So yeah, here's Apple on the day. Look at that. Yeah, Apple's up 3.3. You know what? Let's do some analysis on Apple. I saw that one earlier and I never got to it. I apologize. I'll be quick about this one. But look, they have a huge smartphone market share. Apple has a 23% market share. And here's why Apple's so heavily affected by tariffs. If we go to where the revenue comes from, did you know only 36% of Apple's revenue comes from the US? So look at that. 25% comes from Europe. China is a huge 17%. Asia, Japan. So Yeah, look at this. iPhone is 55% of their business. Then they're in the services business. If you ever buy anything on the Apple App Store, they take a 30% fee. They have the wearables like the AirPods. A lot of people are locked in the Apple ecosystem. Like me, I'm on the Apple iPhone. They made 36 billion of net income just in the most recent quarter. So Apple is really cool. They're a dividend growth name. Oh, hey, Leo, this is a brokerage right here. If you want to download it, it's in the link tree in bio, first link there. So someone, I don't like to look at Nike. I feel bad if you own Nike because they're at like an all-time low right now. I actually just completely sold out of all my Nike at $78. A little bit fortunately timed there, but the thing is, like, they just lost their growth. The net income's down 32, sales are down 10, so their margins have collapsed. Like if we look at their footwear revenue, most of the revenue comes from their footwear. It's down 12% year over year, so it's just really unfortunate. Um, so I want to see the growth come back, and that's all that bad news is happening before the tariffs. So they've already had these bad numbers before the tariffs have even hit them. Yo, I haven't looked at this stock in literally years, and I used to own this company. I owned this stock right around here after this dip. I owned it in 2022. I don't own it anymore, but this is Clorox. What is the Hey, this is a brokerage. It's called Mumu. If you want to download it, it's in the link tree in bio. First link, King. But what's up? Look at Clorox. They have a 3.4% yield, but that's not great. It says the payout ratio is at 200%. So let's see. Well, the net income is it's overall good. I mean, they had a one-time adjustment making their net income go negative, but yeah, they're usually making 200 million of net income a quarter. What about free cash flow? Yeah, they're making a lot of free cash flow every quarter. But they just sell commodities like wipes and stuff. Like, yeah, look at their sales on an annual basis. Yeah, they had a lot of sales bump from 2020. But yeah, look at their health and wellness. The business isn't growing. The household, yeah, the business isn't growing. Lifestyle, not really growing. So yeah, unfortunately, Clark's has just lost their growth. So I want to see the growth come back. So let's see. Lots of upside with Apple. Hey, I think Apple's just a great buy and hold for the long run. They're the largest holding in the S&P, and same with the Nasdaq 100. If we look at the QQQ, the largest holding in the Qs is literally Apple. So every month, so much passive money goes into Apple just because people set money away in their retirement accounts, putting it in the S&P. So much passive money just flows into Apple. That's one to just hold for the long run. And hey, you know who approves my message? Nancy Pelosi, because Nancy Pelosi's largest holding is Apple. It's 27%. It's that way for a reason. Smart investors own this. Let's go to Warren Buffett's portfolio. Warren Buffett's largest holding is Apple. It's 22%. So it's really interesting. So let's see here. Can you check? Oh, Procter and Gamble. Yeah, hey, we'll try and look at that one, Aiden. So here's Procter and Gamble right here. This is a great staple, consumer staple. Like you can't go wrong owning Procter and Gamble. 2.3% yield. Oh, hey Taylor, this is a brokerage right here. If you want to get this brokerage, it's in the link tree in bio. First link there. It's called Mumu. It's free. But look at the net income. This is the best part. PG's just making 3 to 4 billion of net income every single quarter. It's just so impressive. And then they have a super safe dividend, and the stock's pretty much at an all-time high. We know they own Tide. They own so many multi-billion-dollar brands. So yeah. So I'll try and check it out. 5218WA. So I think this might be the stock. I don't know. I can't. There's nothing to look at here besides the stock price. There's no financials. Yeah, I'm sorry, man. I just cannot find that stock. I wish I could find it for you, Aiden. But I appreciate you being here. Super Oliver said Disney. Oh boys, uh-oh. Yo, uh, we gotta go. Appreciate y'all being here on the YouTube stream. Um, See you later. Y'all are the best. Hope you have a great rest of your day. My TikTok account just got banned. Uh-oh. Anyway, thanks for being here on the YouTube stream. If you wanted to follow or subscribe, I'd really appreciate that. And I just did 3-year portfolio update if you want to check it out. Thanks again. See you later, XYT, Daniel.